Hey everybody, this is Mitch Ferraro from F Street. I hope everyone's having an amazing day out there today. Today, I'm super pumped to have this conversation. We are with our loan origination manager, Emma Kettering, and I'm super excited to have this conversation because we've got a lot going on here at F Street, right? I mean, like there is like a lot of moving pieces. We've got about 30 employees here at F Street. Everyone's buzzing around. It's a great time to be a part of F Street. And I want to talk to Emma today because our original, private debt fund and the hard money co is really geared towards residential real estate, but we are starting to see a lot of more loans come in, bigger size loans. I want to dive into that with Emma because she's on the front line seeing all those. So Emma, thank you so much for your time today. I really, really appreciate it. Before we kind of dive into what's going on, give us a little background on who you are, what you do here, and we'll dive right into it.
Thank you, Mitch. Appreciate the warm welcome. Always. You're the best to work with. So I'm excited. I'm a little newer to F Street. I've been here since mid-April.
Okay.
I started my career in Big Four public accounting at Deloitte.
Okay.
Moved this way. I was in San Francisco at the time, moved this way 2 years ago to learn commercial real estate with a really sophisticated group.
Okay.
They're part of a networking group called Commercial Academy.
Nice.
The people I was working with were mostly doing value add retail, triple net leases.
Yep.
And they would stabilize the asset and either sell or refinance. But I learned a ton with them.
Yeah.
Joined F Street, actually came to Scott for a hard money loan.
Okay.
Realized how sophisticated you guys were. We ended up connecting and I realized that I wanted to be a part of what you guys are doing here.
Yeah.
So initially I actually wanted to be on the investor relations side.
All right. All right.
But he said, we really need more help deploying money. Like Mitch is doing such a good job. We've got enough money. It's time to deploy it. So quickly transitioned to the originations team.
Okay.
And since I joined, we've actually doubled the sales team. We brought on 4 new loan originators and they're crushing it.
Yeah.
As of today, 3 out of the 4 of them have closed a loan already. So at least one, if not multiple.
That's awesome.
So that's been great. And we are training them on how to give every investor a very personalized experience.
Yep.
There's so many ways to do a real estate transaction that we are able to lend on very unique deals, big deals, land deals, so on assets and in markets that some lenders won't.
Yep.
And we give each investor a very personalized experience as far as analyzing their deal, themselves as a borrower, as well as the deal, and give them a really, fair opportunity to continue to grow their investing career. So I'm loving it, and we're doing a lot of things here.
Yeah, it's really cool. And as I kind of pointed out before, we're in like this growth mode right now. We are just seeing a lot of expansion. We're probably gonna have one of the best years ever at deploying cash in F Street's history. The private debt fund, the hard money co, it's been around for 16 years. And to have a year like that and to see what we can do even that for the goals that are going to be for next year is extremely exciting. So as she said, we're bringing on new loan originators. They're closing loans. We're training them. We want our investors that we're loaning the money out to have a really good experience with us. So it just is a really exciting time to be a part of F Street. So as I mentioned before, our bread and butter is the residential real estate, right? The $200,000 loan, $300,000 loan to a investor that's flipping a property that they're going to resell in the open market after they finish it up, or they're going to use the BRRRR strategy, the buy, rehab, rent, and refinance strategy to buy the property, get it fixed up, rent it out, and then refinance it. That's our bread and butter. That's what we're doing all day, every day. We're doing, 400, 500 active loans out in the marketplace at any given time. But we are starting to see larger deals come across our desk where, Scott and yourself are looking at them. You're understanding them to say this could be a good opportunity for F Street to make some really good money. I really want to just kind of start diving into like, what are those like looking like? How are we sourcing those deals? Are they true deals and are we able to capitalize on them? I feel like I got like 1,000 questions, but kind of just give me an understanding of what that looks like from a 30,000 foot view.
Absolutely. So the portfolio, like you said, was really built. Their bread and butter was on that 1 to 4 unit residential.
Yep.
And we still love those. We're great at those. We know how to underwrite those and give them, we do our in-house property valuations, which is a unique feature.
Yep.
But we know how to put a value on those, underwrite them, and get them closed very quickly. We still love them. But as we're becoming a more sizable fund, we're able to do some bigger deals.
Yeah.
And so we have some of the more recent ones that have been interesting and cool are land deals.
Yeah.
A lot of hard money companies avoid those at all costs.
Yep.
There's multiple phases of a land development when you purchase raw land and it's not fully entitled or permitted.
Yep.
it usually doesn't make sense for them to come to us yet. We're meant to be very short term.
Yep.
So they should be what's called shovel ready, which is fully permitted and entitled when they come to us. But then we can help people with horizontal development.
Yep.
A lot of lenders stay away from that. It can be expensive. The only collateral that you're holding often is a piece of land. So we're really doing that for a specific type of borrower.
Yep.
We look for stellar track record
Yep.
and experience.
Yep.
We look for strong liquidity.
Yep.
Credit is also important.
Yep.
If they have a collateral property
Yeah.
that we can hold instead of just the land, that's
Right.
also fantastic.
Yeah.
So we're looking at the location and the experience of the developer, but we can help people with the horizontal
Yep.
as well as the vertical development. So that's neat.
Yeah.
We also have gone into commercial deals.
Yep.
So there's an amazingly cool deal in Florida going on. It's a ground up development.
Yep.
They have a signed lease with a nationwide tenant.
Yep.
So we're really excited to help them get that one. It's in a beautiful area near Boca Raton, Florida. So Scott knows it well. We love
Yeah.
the deal. We're investing in the borrower. So our bread and butter was 1 to 4 unit residential.
Yeah.
We've gone into more commercial sized deals.
Yep.
We love multifamily.
Yeah.
We like industrial.
Yep.
We're open to mixed use.
Yep.
We avoid office.
Yep.
We don't like restaurants.
Yep.
But we can do land
Yep.
as long as they're fully permitted and entitled, ready
Yep.
for that horizontal or the vertical.
Yeah.
So yeah, we're pretty open to a lot of different types of deals.
Yeah. I think it's really cool too, because I know for a lot of investors that are in our fund, Scott is very entrenched in the business. You don't find a lot of owners like Scott. A lot of owners, they try to, maybe push themselves back a little bit, but Scott loves being in the business. It's just a part of who he is. And for Scott to be a part of these deals and with his knowledge and his background, and obviously he's running the company and giving final approval, he does a really, really good job of making sure like this deal is good for you as the investor inside the fund as well. Like
Yeah.
he's going to put his investors first and make sure that these are actual deals that he knows that he would, if a deal like this came across his desk, he'd do that deal 10 out of 10 times. Like in his mind, that's what he wants. He wants the home run that he
Yep.
knows is going to be a sure thing. And I love it too. And I've seen this in other instances, right? Where you're talking about something like a land deal and there's not much collateral there, but maybe there is another piece of collateral that borrower has that they can
Absolutely.
put up
Mhm.
saying, hey, if something goes south, we just now have this $1 million home that's free and clear because they put that collateral up to get the loan for us for borrowing that money. So I think that's really cool that we do try to find these creative ways to make sure that we're backed and not just kind of throwing up a Hail Mary in the fourth quarter and saying we hope this works, right? So I think that's one thing that is always very important for our investors to know is that we are trying to put you and your money first all the time, and Scott's doing a really good job of making sure that happens.
Yes.
Are
Scott's very involved in the process, and that's one thing we're trying to put a little bit more emphasis on is training all of the whole team. Like I saw Kevin Worm's episode and he so underplays all the work he does because he looks at like every single name of the seller on record, comparing it to the purchase and sale agreement. Like he's asking how people have relationships with it. Like he is so in the nitty gritty details. So Kevin does an incredible job.
Yep.
Brett's also a real estate professional for many, many years. So he puts the valuation on the property.
Yep.
And Scott always gives his final say, but we're really trying to train the new loan originators as well as that front line of defense.
Yep.
Because those 500 applications that come in a month, we're the first line of defense. We call the borrower, get the whole story. So we're really trying to make sure that even the loan originators are learning how to analyze those deals
Yep.
and, saying yes and no to the ones that make sense. We have about a 7 to 10% close rate. So 9 out of 10 deals that come across our desk,
Yeah.
they're either not good deals or they'll never close for another reason.
Yeah.
So we like to go with the deals that make sense for all the parties,
Yeah.
but we're doing a really, a good job of training everybody on how to analyze the deals by asking the right questions about the borrower,
Yep.
their experience, cash, credit,
Yep.
and then also the deal itself. So yeah, it's really fun. We're looking at like how much equity do they have? How much skin in the game is a super important element for
Yeah.
us. So on a refinance, like how much equity is in the property already?
Mhm.
On a purchase, how much cash or collateral can you bring to the close?
Yep.
What we're looking to not do is, have the borrower have no skin in the game, be able to walk away easily,
Yeah.
and then we have to deal with the default. So we already have a pretty low default rate compared to most other like
Yeah.
lenders or hard money companies. So yeah, we want to keep that up.
Yeah, and it's what she's talking about when she says Kevin Worm and Brett, these are people that are on our team that are part of S Street. Kevin does, he's a lead underwriter. He does an amazing job of being able to, really scrutinize the deal and say, this I feel is a good deal and I want to pass it along to Scott to give final approval, or he'll push back to the loan originators and the processors to say, hey, we need more information on this. This doesn't feel right. And then Brett, he's making sure that the valuations of the properties of the actual assets are what we're saying that they are. He's going and doing all the research, whether it's on the MLS, or we have another really cool program called Richer Values that they look at to make sure that these assets have the real value that we're saying they're going to be when we go
Yes.
ahead and do the loan.
Yeah, Brett does in-house property valuations, which is really cool. It speeds up the
Yep.
process quite a bit because we don't require an appraisal.
Yep.
We utilize a service called TruePix,
Yep.
so we can see it geotracks the location, it tracks the
Yeah.
time, and it shows us the current condition of the property.
Yep.
But Brett uses that along with running comps to
Yep.
come to the valuation. So no appraisal speeds up the process
Yeah.
immensely. And we do no hard credit check. So we're really truly built for real estate investors because
Yeah.
every time you get a hard credit pull, it affects your credit.
Right. Right.
So real estate investors don't have to worry about that. And then we also allow you to come in cross collateralized, which
Yep.
will allow us to bring 100% financing on the purchase price
Yep.
and repairs as long as you fall within our max loan amount. So we fund based off of the ARV, another unique feature. So we're looking at the after repair value and we can bring in up to 65% of that.
Yep.
It doesn't waive the borrower's down payment requirements.
Right.
We still have that skin in the game element that
Right.
is super important. So yeah, that's how we've been able to maintain such a low default rate.
Yeah, yeah, and just if you haven't seen the last episode with Kevin Worm, we had I give him kudos on that episode where the first time in the company's history, in the 16-year history, from January 1 of 2025 all the way through July 31st of 2025, we've had a 0% default rate on every loan that has gone out in that time period. So again, big kudos to Kevin and the team. I mean, that's a big win. Like that's huge. And I want our investors to understand like that's a really, really cool thing. That means that the deals that we're doing, we're getting really, really good borrowers to borrow our money. I did want to dive into a little bit our Sync and Edge program, which we are just now launching. So Sync and Edge is two programs. The Edge program is a $5 million plus liquidity investor if you have $5 million or more to invest. And the Sync program is $10 million or more if you have to invest. And we're looking for these types of investors because we have a proven track record with a couple of families already that we do this for, where they are basically partnering with Scott in these deals. And I think with what we're seeing come across our desk or your desk or the loan originator's desk of deals, we are looking for investors that want to personally partner with Scott. And we basically have the systems in place and we're trying to replicate those types of systems. Maybe if you could just touch on a little more on that program or what types of deals that you're seeing that might
Sure.
fit that type of program. I'd just like to hear your thoughts on that.
Of course.
Yeah.
So Mitch has done obviously an incredible job of, raising money for the private debt fund, but this is for those investors who are, high net worth individuals with
Yeah.
$5+ million that want to see a little bit of a higher return.
Yep.
So what we do for them is a direct placement. So instead of being, invested in the portfolio across all 500 to 600 loans,
Yep.
you're directly placed on specific loans. So we create a joint venture with you and you specifically fund certain assets.
Yep.
So we send them, first we do our own approval and underwriting,
Yep.
then we send them to you to make sure you're interested in actually funding that deal.
Yep.
And then in the instance where you're secured by a first lien position in that property and you make a higher return. So if you do the Edge program, which is the $5 million program,
Yep.
you get the direct placement with the higher return. You also get some of the origination points
Right.
up front. If you do the Sync program, which is the $10 million one, we actually match your investment.
Right.
So it's 10 million from us, 10 million from you.
Yep.
And so you can be diversified across more assets.
Yeah.
So it's a really great feature. I mean, in order to increase your diversification, but still get those same increased returns.
Yeah. And what I love too, and I've been very fortunate to be on calls with Scott with some investors that are interested in this. We're looking to add 3 more right now this quarter. And I've been able to be kind of the fly on the wall during these conversations that Scott's having with these investors. This is like a no pressure type of deal. Like if Scott's putting out a term sheet on these deals, he's doing the deal no matter what.
Yep.
It's if you want to partner with him, That's what he's looking for. He's looking for partners to come in on these deals. If he's going to go ahead and write a term sheet, he's doing the deal either way.
Yeah,
He's just we're looking for more money so we can do more of them. The
right.
more that the more money that we have, the more of these types of deals that we can do. And it's really cool because I know Scott's a no pressure sales guy. He's like, if you don't like the deal, don't like it. If you don't like because the county's county of the name starts in M and you don't like M counties, don't do it. Don't, he's just a very, very easy guy. He's going to do a deal no matter what, either way. So
Well,
go ahead.
sorry to interrupt you,
Yeah.
but I just wanted to add that if we're sending these families or these individuals already fully approved loans, so it's not like we're asking for them to do any sort of underwriting. We have gone through that whole process. If they decide to be the one funding it, great. If not, we go ahead and fund it anyway. So they're fully approved deals. You just put your stamp on it if you're interested or not. But it's a great way to increase your returns, be backed by a first lien position,
Yeah.
and be a little bit more involved.
Yeah, absolutely. And again, their higher returns, which is always great. And I think the biggest thing with this whole program is that we have done this already. We're just
Yep.
trying to replicate it from the families that we're already doing it with. So if that is something that you as an investor that might be watching this today, please feel free to reach out to me, Mitch at fstreet.com. We have a full information packet that we can send you. And the biggest thing would be getting you on a call with Scott once you show your interest and once we know that you may have that type of liquidity to invest, because it is something that, again, we're trying to get 3 families in this year or this quarter to do. And I know that we'll continue to try to replicate it, as we continue to grow, as we continue to see more deals. Emma, thank you so much for your time today. I really, really appreciate it. Anything that you kind of want to say before we get out of here today?
I'm excited that the company's continuing to grow. It's an amazing time to be a part of it,
Yeah.
and we're looking forward to everybody else who wants to be involved.
Yeah, absolutely. Well, everyone, thank you so much again for your time and watching this. Again, if you have any questions, you can reach out to me at mitch at fstreet.com. I really appreciate anyone checking this out, and everyone have a great day. Thank you.
Thank you.